You study your fields, test different hybrids, track results, plan rotations, research marketing options, select your trait programs, prep your equipment, watch the forecast, and when the moment is right, you go to work. Shouldn't your seed company invest as much in your success as you do? We think so too. Our seed, your soil, total success. LG Seeds. Contact your local dealer for more information.
Welcome to the Farms.com Daily Market Commentary for September 19th, 2011. This is Michelle Lemarand, Commodity Research Analyst for Farms.com Risk Management. Today we wanted to provide our observations from the 2011 Husker Harvest Days Farm Show in Grand Island, Nebraska that we attended last week from September 13th to 15th, as well as the Woodstock Outdoor Farm Show in Woodstock, Ontario, Canada. These are the top 8 observations from the 2011 Husker Harvest Days. Number 1, the irrigated corn looked good, with the average producer projecting a yield in the 180s, accounting for both dryland and irrigated corn. This is higher than the USDA's current estimate of 160 bushels per acre for Nebraska. Should an average yield of 180 bushels per acre be realized or above this, this would set a new production record for the state. Number 2, there is much talk that due to lower yields, the U.S. may not be able to grow 92 to 93 million acres in 2012 as the seed will not be there. This is a common theme that we've heard over the past several farm shows that we have attended from both analysts and producers. Number 3, Cargill was offering a phenomenal farm show special offer of $10 a bushel corn for 1,000 bushels. Number 4, severe windstorms and hail had caused damage to fields throughout the state, as well as in Kentucky, which we also traveled through, with corn laying flat in portions of some fields. According to one agronomist, some producers may attempt to harvest this corn using a soybean head. Number 5, the corn and soybean harvest is anticipated to be slightly behind that of last year, with more warm and dry weather needed before the crops can be harvested. According to the latest USDA Crop Progress Report, only 9% of the state's corn crop was mature as of September 11th, compared to 23% on the same date last year and the 5-year average of 20%. Number 6, the general consensus was that the USDA's projected average U.S. corn yield of 148.1 bushels per acre is too low. Early reports of higher than expected yields in Illinois and Iowa seem to further support this belief. Number 7, just one state to the south, Kansas was incredibly dry. Although not as severe as Texas, the crops there have suffered greatly, with the general landscape a very parched yellow. And number 8, while many farmers believe that the overall U.S. corn yield was in actuality higher than the USDA's current projection, a fair number also believe that the current harvested acres number is too high. Estimates range from 500,000 to 2 million acres too many, with many citing flooding and drought as the 2 main factors for the decline. The flood damage along the Missouri River was also a popular topic, with some producers mentioning reports that it may be 2 to 5 years before some of the areas can be planted again. These are the top 5 observations from the Woodstock Outdoor Farm Show in Ontario, Canada. Number 1, farmers are not booking grain forward. It's very quiet because they are waiting to see what the combine says on the average yields before committing more bushels forward. Number 2, in some cases, the end users are lowering their basis on corn to attract some bushels. Some were at a negative 20 under for July 2012, while others were at negative 25 under for December corn futures. Number 3, farmers do not believe that the demand is stronger than some are forecasting, and some believe grain futures will trend lower in the coming months. And number 4, many farmers are booking inputs forward for 2012, such as potash, nitrogen, and fertilizer, as well as placing early seed orders with their suppliers. And lastly, some farmers have started to book a 2012 pricing for corn and soybeans, as we have recommended. Bottom line, a better than expected theme drove markets down last week and continues to influence trade today. Talk of 180 bushel per acre average yields in Illinois put pressure on markets, as this number surprised many, especially since the current USDA estimate for Illinois is 161 bushels per acre, with an average U.S. yield currently pegged at 148.1. However, only 15% of the Illinois crop has been harvested at best. In addition, according to agromoney.com, the areas yielding 180 bushels per acre normally yield 220 to 230. So we are still seeing a significant reduction compared to the average there. Speculation that demand for commodities will decline as companies wait for a solution to the euro debt crisis caused prices to fall again today. Money managers cut their net long positions in 18 commodities by 5.2% to 1.21 million futures and options contract in the week ending September 13th. Long interest in corn was cut by approximately 10%, while long interest in soybeans was cut by approximately 9%. Driven primarily by fear, this was the first big drop since early August. And lastly, rumors today that there is a significant interest in U.S. corn from Asia helped to stabilize prices after being down double digits early in trade. This may have been a temporary bottom as markets are short-term oversold. In other news, in this week's Commitment of Traders report, as of September 13th, showed declines in index fund long positions across corn, soybeans, and wheat. Managed money long positions also declined for corn and soybeans, while short positions rose for wheat. Canola production in Canada is now estimated at 13.1 million metric tons versus 13.4 million metric tons last month. The number may see a further reduction in the coming weeks as there is speculation that the crop may have been hit harder by the frost in many areas of the U.S. However, the advancing canola harvest in Western Canada, as well as continued reports of stronger yield potential, outweighed frost news, and lower U.S. soybean prices continued to cause canola prices to decline. Corn production in China reached a historical high, up 3% from last year, to reach 182.5 million metric tons in 2011. However, even with this new record production, the country's growing demand will still require China to import corn, particularly due to demand from livestock and other productive sectors. According to Oil World, China's soybean imports may rise by 6 million metric tons to 59 million metric tons in the 2012 marketing year that begins on October 1st. The projected increase is thought to be attributed to rising consumption and lower domestic output due to a 6% fall in acreage to 8.3 million hectares. China's soybean output is set to decline to 13.7 million metric tons from 14.6, according to Oil World. November soybeans have fallen to $13.50 from over $14.60 just a few short weeks ago. A large amount of Asian business is reportedly going through South America as U.S. prices are seemingly not competitive on the world market right now. Retail pork prices were up 7.5% in August due to high feed prices and tight herd supplies as well as strong export demand. Boneless pork chops averaged $4.13 a pound, up from $4.01 in July and up from $3.93 the year prior. Bacon averaged $4.77 per pound, up 1 cent from July and up 42 cents from the year prior. And lastly, in today's USDA Crop Progress Report, markets will be looking closely at the maturity ratings for corn and soybeans after last week's frost, as well as soybean condition ratings. That's all for today. Have a great day.